Okay, we're live. There we go. Hello, everyone, for another episode of Bondex. Today, here we have John Sarson's founder and CEO of Sarson Funds, and we are very, very lucky to have him. He comes to the cryptocurrency investment world from a very interesting, angle that I've never seen before. And without more ado, I'd like to let him kind of give us a bit more of an intro about his company and his story with blockchain.
Hi there, Ignacio. Thank you so much for having me on the program. I do come to crypto from a traditional financial Wall Street background. I spent 15 years as a financial advisor. And during that time period, I started trading some Bitcoin in my Coinbase account in 2015. When I left Wall Street proper and headed out on my own to do my own registered investment advisory firm, really spent a lot more time trying to understand the disruptive potential of blockchain technology and Bitcoin. And as everyone on this program has probably gone down the same rabbit hole, I had this aha moment when I realized that traditional Wall Street participants were very unaware of the coming paradigm shift that was going to be brought on the back of blockchain technology. So then we set up a firm whose mission it is to try to help traditional financial professionals understand what's happening and then hopefully capitalize on that with their clients. It's not often that financial advisors' clients know more about a financial instrument than the advisor. But in the case of cryptocurrency, this is happening all the time. And financial advisors will call us up and they will ask us the funniest questions. I was just laughing about some of those in the green room with Ignacio. They'll ask us what our thoughts are on Ethereum, or if there's any other Bitcoins that they should be looking at. And we chuckle, but at the end of the day, cryptocurrency as an industry has evolved and moved quickly, and they've really left non-technology people in the dust. And so that's kind of where my firm Sarson Funds, where we pick up the pieces and try to educate financial professionals that really have a strong desire to understand what's happening. We try to help them understand what's happening. And then we have a slew of different investment vehicles to help them and their clients get invested in these trends that are, of course, the investment vehicles are doing quite well. And we have great insight really into like the psyche of the financial advisor here in North America where we're located.
I think that's a fantastic mission and angle that you tackle it from, which is combining education into sort of the mainstream. So you're helping in the adoption of the general cryptocurrency and blockchain technologies, which is crucial in its overall mission to take over the world, right? And the more that we get, an older generation and a more traditional generation to understand the asset and give it more credit as a proper asset class, the better chance that we all have, right? And this happens, this happens to us a lot, that in which in the talent market for blockchain skills in general, right? Because the market is kind of underdeveloped or immature, even though it's a booming industry, they don't have people to hire because no one has experience for 5 or 10 years in the industry. So it takes a lot of people that want to get into the industry to learn about it, to then be able to be professionals in the industry. So I know exactly what kind of challenges you're seeing from the investor side. And I'm happy to hear that, there's a lot of investment professionals that want to learn, that are eager to learn about the asset class. But what you're telling me is that a lot of times it happens because their clients are in private wealth and financial advisors are coming to them and they're like, what is this Bitcoin stuff? Like, tell me about it. And they don't have the tools to do it, right?
Yeah, they don't understand themselves. And, most financial advisors, there's about 250,000 financial advisors in North America. They work for like a company like a UBS or a Merrill Lynch or a Wells Fargo. And like these big broker dealers, they decided erroneously about 6 years ago that they were going to stop their financial advisors from doing anything with cryptocurrencies because cryptocurrencies were just going to be a flash in the pan. And this obviously has not proven to be the case. Blockchain technology is disrupting nearly every industry that we have, and it's providing better, faster, cheaper commerce. And like better, faster, cheaper, that's like what we're built upon here in the West. And so the fact that these large brokerage houses like decided that their advisors weren't going to be allowed to do this stuff has really kind of set them back. So there's been no top-down leadership from these big firms. And if you work at a Merrill Lynch, like you're used to getting a lot of spoon feeding, really, like Mother Merrill, as it's affectionately referred to, usually curates like your advisor training and your education to make sure that you understand what a stock and a bond is, and what a preferred is, and when to use which with what clients. And they've done none of that legwork around cryptocurrency. So financial advisors are oftentimes scratching their heads as their clients come to them with these questions. You know, what is Bitcoin? Why is it going up so much? You know, what is this paradigm shift that they are very aware is happening in front of their faces? And the financial advisors don't really have the tool set to help them effectively. So it's a big part of what we do is we take financial advisors, we put them through boot camps, we make sure that they understand, you know, the trends that are happening in crypto. We give them the collateral, the marketing materials that they need to turn around and educate their clients on the different opportunities. And we think that like we're basically bringing them into the trade. You know, cryptocurrency is growing quickly, and the adoption is growing the most rapidly that any new technology has ever been assimilated. But wealthy investor class people around the world are not used to investing $200,000 in an app on their phone. They're used to working with a financial advisor. And those financial advisors need to understand what the opportunity is and what the risks are before they're going to start recommending any of their clients make these types of allocations, even though the allocations are very appropriate for a diversified portfolio. And every client always needs sources of alpha or return to try to reach their retirement goals, especially in an environment where governments around the world are debasing currencies through letting inflation kind of get out of control. So crypto is badly needed, but no advisors and no clients are really willing to put significant money into the crypto trade until they understand it better. And that's actually the same probably experience that everyone on the call went through. I know I did when I first started buying some Bitcoin on my Coinbase app in 2015. Like I put in $1,000 and it doubled. You know, I made like $1,000. But the reason I didn't put in more money is because I didn't really understand it. And so it's only after you really understand what the risks are associated with a new asset class, can you really put the type of money into the investment that will actually have a meaningful impact on your life. And we want people to do that. We want people to come into the cryptocurrency world. We want them to understand that these are assets that are going to become permanent parts of their portfolio. These are protocols that are going to disrupt traditional businesses. And they're going to be fabulous investments in many instances for those people that are savvy enough and thoughtful enough to understand the investment opportunity.
I mean, we're very aligned on that, and you know, it cracks me up when you say this, because being now a crypto native for a few years, you forget about your rate of adoption and your learning curve when you first started, experiencing the asset and messing around with the asset. That actually now it's gotten easier and easier, right, to invest into the asset. But you used to have a certain knowledge. I mean, there's certain coins that I'm thinking about, like Decred or something like that, in which I had to do a wallet, and then there was proof of stake, and they were coming out with all this innovation. But unless you were a bit savvy, it was impossible. And I don't see anyone 50 and above, or my grandparents or baby boomers, who are actually most of the managed wealth in the world today, kind of now grabbing a Gemini account or grabbing a Telegram and getting their news of Discord to know what coins to follow. And I think you're completely right. Unless they have that intermediary, which is a knowledgeable financial advisor that can give them kind of a lay of the land and good advice, right? They're not going to be entering the asset. And what we need as the people on the inside from the blockchain industry, we need them to adopt it. We need the mainstream to adopt it. We need the adoption to increase on all levels of society, and no matter the age. So I think that's fantastic.
Yeah, it's a big pile of money that's being managed by financial advisors on behalf of people in North America. It's $24 trillion intermediary advised assets, and essentially none of it is allocated to cryptocurrency at the moment. Like maybe 0.5%, 50 basis points.
What I keep hearing is the rule
technology.
What I keep hearing is the rule of thumb of other people that I've heard that are ultra high net worth or high net worth individuals. Like 1% of your portfolio should be alternative investments or should be in cryptocurrency, and some of them pitch even up to 3%. Is that what you're seeing, or do you think or you think it should be even higher than that, out of that 24 trillion?
Well, let me ask you a question back. Like, what percentage of your portfolio should be in disruptive companies that are displacing traditional brick and mortars? I mean, like clearly a high percentage. Now,
I
it just so
think a high
happens that
percentage.
that disruption is really happening more often than not. You taking advantage of blockchain technology and applying it in different ways. As far as like just holding currencies for the purposes of diversifying into other currencies, like the way you might diversify into gold, like then yeah, I think that 1%, 2%, you might have that into gold. Maybe it should be into Bitcoin instead. But when you start to think of it like each protocol being like a replacement for a company, then I think that clearly you could have like 30% of your portfolio in protocols, not necessarily Bitcoin. But I think that the percentages that people are suggesting at the onset of these conversations is indicative of the fact that they don't really understand the expanded value proposition of blockchain technology. So out of that $24 trillion, maybe only like 0.5% is allocated so far on behalf of intermediary advised retail assets. Let's just say, to keep it easy, let's say in the future, like that number goes to 4%, like 4% of someone's investable portfolio. That would suggest that we're only like 1/8 of the way into the allocation. And so there's a lot more money in the wings. And what it's waiting for is it's waiting for people to have a better understanding of these opportunities. One of the ways I like to try to share with financial professionals about the paradigm shift that we're going through is that the last 20 years were all about software companies accruing value as they connected a need with a service. So like you think of Uber, you want to give a ride, someone on Uber wants to take a ride, Uber connects you, and Uber accrues value. For the next 20 years, it's going to be about protocols directing that, connecting that passenger and the driver to each other directly on the protocol. And the value is going to be left in the protocol and in the transaction for both participants of the transaction. And it's a paradigm shift because protocols aren't software companies. They don't have CEOs. They don't issue 10Ks. They don't fit into your 401k. They don't have QSIPs. They're not securities. And so we have a lot of regulatory trailblazing that needs to happen in the United States. We were on a call this afternoon with Senator Loomis's general counsel. They were talking about the name of this act, so I get it right. The Responsible Innovation Act, which is really just like Congress's, not their first attempt, but one of their best attempts yet to try to bring the regulatory landscape up to speed with the opportunity at hand. Regulation will always trail innovation by definition, but we do need thoughtful regulation to make sure that certain things that happen in cryptocurrency worlds right now will be deemed inappropriate, such as manipulating the price of a cryptocurrency. That's not illegal right now, and we see people that are abusing the fact that it's not illegal. And so we'll get some common sense legislation out of Congress in the next couple of months, and it should continue to bring more and more institutional investors into the space.
I think we're in agreement there. And there's something else that you've said before that caught my eye or my ears, which was a lot of the financial and big institutions that you're talking about, they were late to the game. I remember one of the most significant ones was, I'm an ex-finance myself. What Jamie Dimon kind of said, this is a fad and this is not a serious asset, etc. And then years later, you have the JP Morgan team kind of setting up their own team. And now every big bank and every shop has their own, dedicated blockchain team, which now means the education not just goes into the general public as investors, but we need people with the blockchain skills to fill these jobs. So do you think now that you have a privileged kind of view on this kind of talent market, do you think that there's going to be more and more financial advisors in the cryptocurrency industry? Like in the cryptocurrency market, financial advisory firms are going to need crypto experts, right? And crypto economists.
100%. Every major investment bank has these job postings, and they're so funny. It's like Citibank is looking for 450 cryptocurrency experts for their tokenization division. I kind of think that's kind of comical because like how many people does it take to tokenize an asset, right? Evidently, they think it takes 450 people. And Bank of America has job openings for 100 people that are well versed in cryptocurrency. But the reality is that like none of the traditional places where they look for people that are financial experts like have this type of foundational knowledge. At Sarson Funds, we're consistently hiring financial advisors that want to come into crypto and kind of like leave their financial licensing back at their parent firm, and they want to kind of embrace the new economy and DeFi, and they think they can add more value for their clients and provide better services by being part of a decentralized opportunity to help their clients take advantage of the chance for some really outsized returns during the early stages of this worldwide global paradigm shift. And so, yes, these investment banks are looking for experts. You said you came from Goldman Sachs. Is that right? Or
no?
Goldman Sachs has on even more than the rest of the investment banks.
I worked at HSBC for many years. I left as an associate in the M&A financial institutions, actually. But my partners and co-founders were also at two. Well, the other co-founder was at Goldman Sachs, and the other one at JP Morgan. So we all come from traditional finance, and then went into tech, and then clearly saw that blockchain was the future as well, and kind of jumped ship, or just kind of went into the market, and because we saw the paradigm shift that you're talking about, it was very clear for us, and we all did it individually, and they got together to start Bondex, because as you said, essentially the Web 2.0 model, right? They disrupted the market, right? Because they were disintermediating things and bringing a service to a good to a service to the client. But now you're gonna see that supply chain can get even shorter and more disintermediated, right? And that's through those protocols and blockchain technology, and that's gonna happen. But I do say that it is gonna be more of a meritocracy, in that each protocol will also depend on those users, both on the demand and supply side on these marketplaces, on being good actors and contributing to their networks to succeed. And for that, you need to have very well designed incentives. And that's, at least that's the ethos at Bondex and what we're about.
Well, and transparent incentives, right? That Wall Street's current setup is far from transparent, right? It's a old boys system that doesn't have equitable access for all participants. And it's one of the things we love about cryptocurrency, is the fact that it democratizes access to financial products and innovation. And it's a meritocracy, to your point.
That's exactly right. We're about democratizing talent, because those same things that you're talking about, those transparencies and a lot of times conflicts of interest, happen a lot in the talent markets with the talent players, and the way that talent acquisition is structured today with headhunting firms, staffing firms, freelancing platforms, and those type of kind of middlemen that extract more value than they actually give out. And for that, I think
that's traditional Wall Street in a nutshell, right there. One of my heroes, Jeremy Grantham, he says about Wall Street. He runs an RIA called GMO. He says about Wall Street, never before in history have so many people been paid so much for adding so little. I thought that was particularly damaging. I really like that comment. Financial services as a segment of the U.S. economy currently represents 7% of our economy. And that's not commercial banking or retail banking or investment banking. It's just financial services. It's the action of helping people bundle investments and save money for retirement. In 1965, that was only 3.5% of our economy. So either everyone's need to save for retirement has become twice as acute, or, and I'll suggest maybe this is the reality, that Wall Street's just gotten better and better at hiding the fee and charging more and more. And so it's really kind of, I think, a little bit of poetic justice that Wall Street's going to get their collective heads handed to them by decentralized finance. And I think it's fabulous that it's going to be a more democratic and level playing field when we come out the other side. Now, there will be pain along the way. There will be regulations that don't make sense, and there will be institutions that refuse to believe that the world has changed. I mentioned Goldman Sachs earlier. I'll share with all of your listeners something that Goldman Sachs said in May that I thought was just priceless. They were trying to congratulate themselves on the progress that they've made in their blockchain division. And they sent an internal memo around saying that everyone should be proud that the firm has now done Bitcoin transactions both ways, both the future and the non-deliverable forward, and that the contract settled successfully on the CME. So that's where Goldman Sachs was in May. I just think that that's pretty funny, considering every single contract on the CME settled successfully. And anyone on this call that's buying Bitcoin futures or options on the CME, shame on you. That is one of the dumbest ways to buy Bitcoin. But I digress.
They're supposed to be the Tom Brady of investment banking. It seems like the bar is pretty low over there about their blockchain capabilities. But the problem is that also for them, I imagine the talent drought. Number one is that people that have blockchain skills and know-how, they're not on LinkedIn because they don't like it. They're actually getting their jobs to Twitter, which is not designed as a platform. And I guarantee you, the people that are seeing this actually are on the Goldman Sachs job portal are not usual crypto native or crypto knowledgeable people, because they're they don't have the same principles and kind of view of the world. Essentially, it kind of conflicts. So I can really see how these big firms are going to struggle a lot to find that type of talent. Unless you have a traditional guy that's like, I have to learn these skills so I can get a job at Goldman Sachs, and that would be the only reason that he learns it.
Yeah, so I worked at Guggenheim Investments, and Guggenheim is a big credit company, and they do a lot of bank loans, and they'll lend money to like a complicated borrower, and they'll put covenants into the loan. And like covenants into a loan is essentially a smart contract, right? And like if these certain things happen, these conditions happen, then you violated a covenant, and then like, you take that company, you approach that company and say, either I want to be paid back my loan, or I want to like modify the terms of the loan, depending on if, as the lender, if you want to be offensive or defensive. And covenants are awesome, and bank loans are a great product. But now, of course, a smart contract allows anyone to enter into that same contract on chain or like through the smart contract. And then if the covenant is violated, there's no going to a meeting and then requesting that they send you your money back. I'm still attached to those assets on chain. I just pull them back. They come right back to me. There's no credit risk. There's no counterparty risk. Like I don't take them to court. Like I just pull the asset back on chain. And I much prefer to lend money that way than I like to prefer to lend money in a traditional way. And so Wall Street's going to, I think, see some of the benefits of blockchain technology and smart contracts when they start to realize that it can make a lot of the time they spend in courts going through bankruptcy proceedings and trying to get asset workouts and liquidation values. They can kind of make that obsolete. Whereas, like when the covenant's violated, the contract, you pull your asset back. You never really let go of your collateral, which is music to my ears as a portfolio manager. I don't want to have to go to court. I just want to be attached to my assets at all times via the blockchain.
I think arbitration is a very expensive thing, and no one usually, if you can avoid it, of course. I think we're going to end up being, as the whole market, investors, these traditional financial firms adopt the technology, we're going to end up with a spectrum of centralized companies using blockchain technology all the way to decentralized protocols. And then it'll be up to the final user to choose what type of institution or what type of decentralization they want to go for now. I think that's what we're looking at the next 10 to 20 years, most likely. But I think, I guess as the younger generations are very well educated on this and they have more educational resources, more access to information, and they're able to adapt to that technology easier, it's clear to me that they're more likely going to go to the more fair, transparent, and democratic form of cryptocurrency and blockchain technology. Or at least that's what makes sense to me, but I might be biased.
Well, I think that what underlies that entire movement is the fact that too many people have been paid too much for adding too little for too long, and the walled garden that is Wall Street, those walls are breaking down as people are figuring out ways to do these transactions permissionless, and I think that's fabulous. There's a billion people in the world that have a smartphone, but no bank will take them as a client. And everyone on this call knows that. And, protocols gladly service these individuals and provide them with banking where no bank would before. And I think that's great. And I think that's a powerful force for good in the world. And as we see governments that are particularly despotic and they are willing to debase their currencies, which is another way of stealing from their citizens, then we see movements towards cryptocurrency. And we saw this in Venezuela, and we're seeing it in Turkey, and we see it in Iran. And cryptocurrencies take power away from dictators, because dictators, their number one move is to print money and give it to the military. And if you don't have the ability to print money and give it to the military, then you're going to have a hard time being a dictator.
I was familiar with Venezuela. I was not so familiar with Iran or Turkey. So the same thing is happening there?
Yeah, in Argentina.
Argentina I knew about, right? So anywhere where there's a weak cryptocurrency or sort of a kleptocracy, they tend to go more towards cryptocurrency because then they can keep the value much more securely as an individual.
Absolutely. If you lived in Venezuela and you were able to get some of your life savings into cryptocurrency before the government completely debased their currency down to being worth nothing, cryptocurrency is a savior to you. I can only imagine the pain and the horror of working your whole life in saving just to see your government basically steal your money when you're in the second half of your life. So like cryptocurrencies are providing this really great place where you can go to find protection from your local government. And the worse the government's track record as far as like maintaining the stability of their currency, like the more people are interested in cryptocurrency. And so all through Latin America, where there's been chronic inflation at very high levels for decades, like these countries are coming into cryptocurrency, running there with open arms. And we see it in El Salvador and Panama and Ecuador, and we have not seen the last country in Latin America embrace cryptocurrency as a standard. I think that would probably seem just like the first of many.
I completely agree with you. I think that's just on trend, and we're just, even though it's now been going on for 10 years, and I've even at my short age, I've lived through one bear market and I have two crashes. So on the Mt. Gox one, I was also present. I also knew about Bitcoin back then, but I wasn't a crypto native back then. But I have a lot of faith in where we're headed as an industry and where we're heading us, and the benefits that it will bring to society, right? Especially versus, I think you see a lot of companies that are kind of create the next frontier everyone's talking about, which is the metaverse, which I'm sure you've also heard about. But I don't want to put that in the hands of the centralized kind of parties that don't have a great track record of data security or data sovereignty or any of those things. So actually, blockchain has the potential not just to disrupt. You see it from the financial services very closely. So you see the clear use case study about how this is going to disrupt. But it's going to disrupt technology companies, data companies. It's going to disrupt the talent companies. I see that it has a use case in most markets, because most markets have, in today's day and age, a lot of intermediaries that, as you're saying, do too little and extract too much. And so I'm excited. I'm excited for the future.
100%. The cypherpunks of the 1990s that really developed and pioneered internet protocols, like they founded firms like Google, whose motto was "Don't be evil." And they very much believed in this concept of a decentralized internet. And as we know, Google since repealed that motto, which I think is crazy that they would repeal that model of "Don't be evil." But what's effectively happened was we lost control over the internet. The internet is now very centralized. Google and a few other big players really control the internet. And if you are unfortunate enough to be in a country that's gotten sideways with the United States or with the West, like you don't have access to the same internet that we have access to. And that's unfair. The internet's being rebuilt, and it's being rebuilt on a blockchain. I know that your firm, Ignacio, has got some partnerships with Internet Computer. I'd love to hear more about how that works for you. But the great news is that we're having a second go at it. And this time we're going to build a decentralized internet that's censorship proof and that's available to everyone. And some of the same actors that were the cypherpunks from the 1990s, they're all like 45 years old now, and they're excited about the fact that they get a do-over. And this is going to create like a more open and fair and equitable and just world. And I think that it's not crazy to kind of anchor on those high ideals. And I think that should be something that we all feel exceptionally proud of. The fact that we're going to create an environment where things are more fair and more transparent, and we're going to do it on the back of cryptocurrencies this time and blockchain technology.
It will come, but it's not going to come without its challenges either. There's not going to be only good actors, and unfortunately, even when I see a lot of decentralization word being used, centralized power turns to accrue to a few people that were early or had more capital, and that can happen in a number of protocols and that's what happened to the internet. These companies started with very cool ethos, as you just said, right? Google started with a very nice ethos, but I think they say power corrupts from within, right? And once you reach limited power and profits, you end up turning. And I think that's why regulation needs to come. And self-regulation needs to come, and hopefully the good outweigh the bad, and we end up with a good decentralized and blockchain system, essentially, because it can go wrong as well. It's got its dangers and its obstacles.
Yeah, I mean, it sure does. I mean, Ethereum was founded on this principle of a decentralized internet for everyone, and I think Internet Computer fits neatly into that ethos and that mission as well. There's lots of innovative companies like Helium and Holo that are seeing if we can have like a peer-to-peer internet, and if that's going to work. But to your point, yeah, many of these decentralized systems can become centralized as power accrues to the early adopters. Like I'm looking at you, Bitmain. 41% of Bitcoin mining power. So we have to continue to create thoughtfully designed, self-regulatory companies or DAOs that are going to create like a disincentive for centralization and an incentive for participation and diversification. And I think that like we're well on our way to creating a world where DAOs govern important pieces of infrastructure, and then the DAOs are set up as democratically powered decision-making bodies. And I think that's like a new version of democracy that might spread around the world, you know, in ways that American-style democracy was never really quite able to, because of the fact that American-style democracy, for all of its wonderful features, like is not transparent, and it's not necessarily equitable. And so, like, if we can design a better version of democracy, which will lead to a better version of capitalism, with more opportunity for it to be a meritocracy, as we all want, then I think that like we run the risk of changing the world for the better on the back of blockchain technology.
We're very much aligned in our philosophies, John. But just to be clear, so Bondex is a distributed protocol in which there will be a holding company and then we will aim to have progressive decentralization as we hit critical mass. And there is a meritocracy. That's why the users will have a rating. And depending on how high their rating is, because they maintain it through actions and adding value back to the network, then they get more and more say in what happens, essentially. But in the beginning, we're launching as a distributed, not completely decentralized platform, just to be completely transparent.
And then, that's what it takes to get a business off the ground. You have to decentralize it first. In fact, the bill that we were looking at this afternoon, the Responsible Innovation Act, it has a process in there for an asset that might be deemed a security by regulators to say, like, okay, we're decentralized now, so now we would like to be removed from your list of something that's a security. And I really think that's exciting that regulators are willing to kind of acknowledge the fact that when something is decentralized, it's no longer a security. And so far, it seems like the U.S. government is willing to make that concession, provided that certain milestones as far as decentralization are achieved. And so, like, I look forward to watching Bondex in its vision and its mission, how it kind of expands and becomes truly decentralized. Like the Ethereum project. The Ethereum project, the SEC has said it was a security at first, and it's not anymore. And so that's like where we want to be.
That's very good news, actually. That's fantastic news. And John, I appreciate your words of encouragement. And we're reaching the end of our Bondex episode. I don't know which edition exactly this is, but we've been going at it for a few weeks, and I hope everyone's enjoying it. But you know what time it is? It's the end of the episode. So I like to ask John, where does he see the current market conditions? When do you think the bull market's going to end? Are we in a bear market? Give us your kind of view of the current market.
Yeah, I'd be delighted to. So, Bitcoin opened the year around 29,000, and we're currently at 49,000. When you want to look at trends in the market, you've got to really zoom out and see, find the long-term trend. The long-term trend is going to be more stable than the medium-term trend, and the medium-term trend is going to be more stable than the short-term trend. So, from what I can tell, the long-term trend and the medium-term trend are still up for crypto. And I think that anecdotally, I am seeing that every day. I mentioned earlier, we run a couple of different investment funds for accredited investors only here in the United States. And every day we're getting more and more financial, sophisticated financial people. Someone that maybe was a doctor or a MD at an investment bank and now is retired, and they're wanting to come into the trade. And we're seeing like an increasing, with increasing frequency now, how these clients are ready to finally do the due diligence and do the legwork to get into crypto. And as long as smart money is still moving into the space, we still have legs in this bull market. I hate to say it, but like typically retail investors pay the highest prices during like an asset bubble. And this is a little bit different because a lot of retail investors found this before traditional Wall Street institutions, but it's still fair to say that retail intermediary distributed investors, so like the clients that are at the Merrill Lynch's and the Morgan Stanley's of the world, will be some of the last people into this trade, and they're still not even close to in this trade yet. So I do think that during this cycle, We continue to see higher prices. I think we'll be significantly higher by the end of the first quarter. I see a lot of the forces that were at work last year still at work this year. And essentially, we've seen a handoff of the baton from retail to institutional. And that's evidenced by the fact that holidays like Thanksgiving are weak now. And work days like Mondays and Tuesdays are strong. That's because that's when institutions are buying. So institutions are the marginal buyer right now in the marketplace. They will be putting money to work in December. So I would suggest everyone buy this dip. And they'll be putting money to work, in January too. It's called the January effect. Institutions get money. They get deferrals into their 401k programs. They get rid of old positions at the end of the year that they want to, and they make new allocations in January. And every institution is allocated into crypto in January. Every institution, I believe. So I would stay strong. Keep your diamond hands a little bit longer. I think that you will be, and all of your listeners will be quite happy at the end of March with where we are in the cryptocurrency markets. I don't see any reason why this cycle should be different than previous cycles, where after reaching an all-time high, then we correct 85%. We did that in 2018. Bitcoin went to 20,000, corrected 85%. And but each cycle we go between 10x and 20x the previous high. So that would indicate like a price for Bitcoin between 200 and 400,000. So that's where I kind of think the cycle might top out. And I don't see any reason why it has to happen in the first quarter. I think it happened in the first quarter of 2023.
Well, everyone, I really hope that John is exactly right with his predictions. I have similar views, and that would be actually perfect for the fundraising that we're going to be running for blockchain, so that we can take on the LinkedIns of the world. So I hope that these are the trends hold. And John is exactly right. And, he's an expert from Sarson Funds. And I also encourage all of you to go to his website and check out Sarson Funds for all their good educational resources as an investor in the cryptocurrency space. And with that, I will say goodbye to everyone. Have a fantastic day. And John, please stay back a little bit to have a chat.
Thanks for having me, guys. See you later.
1 second.